In this episode, I'm going to talk about the worst areas to buy in Perth right now. You're probably getting spammed like I am with all of these house and land packages or all these buyers agents wanting you to buy in Perth because it's had such a phenomenal run over the last few years and you can make so much money over the next couple of years in capital growth and the cash flow is exceptional. But what's the downside to this? I did a video just recently about Perth's market and a major warning if you are looking at buying in the Perth market. What I'm going to do in this video is have a look at individual areas, and these are the worst areas to be buying into and ones that I believe are going to get affected first and affected the most. I'll start off with the best of the worst and then I'll finish on the worst of the worst areas to be buying in Perth. Nobody's actually talking about the downside because when the property market booms, everyone forgets about what happened in the last cycle. And markets like Perth, which are fragmented from the rest of Australia, are heavily reliant on mining, even up to around 60+% of the GDP in Western Australia relies on mining. So if mining has a hiccup, so does the rest of the market, and it has a ripple effect. So I'm going to show you a couple of stats that, irrespective of what mining does, is going to show you that Perth's market is going to run into oversupply very shortly. And there's some suburbs that are going to feel a pinch first and feel it harder than other areas. So let's jump in. First, worst, best area in Perth is Swan, which is in Perth's northeast. It's got about 75,000 dwellings. And you can see from this typical price graph, from the end of 2020, this market has done phenomenal growth, and especially over the last couple of years, as a lot more interstate investors have moved into the area. The majority of the sales are now to interstate investors because the locals cannot afford mostly to buy properties in this area. Now, this is the worst, best area. So there's still some time left before this market will be in oversupply, and I'm going to show you in a sec. At the moment, this market is absolutely powering. You can see on the left-hand side is the supply. There's virtually no supply in the market. The inventory is less than a couple of months, so that means how long the existing houses will take to sell, and there be no stock left at all. But you can see that red markup, which is 2.67%, is the building approvals. So they are the houses that have been approved to be built, and that is the supply coming online. So that's 2,000 approvals coming online, and I can guarantee you that the majority of those are bought or purchased by interstate investors because they are the house and land packages. And what do interstate investors want? They want to be able to purchase the property and then lease it out. So on the right-hand side in the demand column is the vacancy rate, which is 1.25%. This is an extremely tight market for a rental property. So 1.25% is considered tight because 2% is about a balanced market. So we're in a tight market, but as that new stock comes online with those building approvals, those 2,000 dwellings, that vacancy rate is going to start to climb, and it already has started that motion. So you might be thinking, so what? You've got all these building approvals, but they're not yet built, and it's going to take ages for them to be built. And then once they are built, then people are going to just move in and fill them up. Well, that has been true for the last few years because mining has been booming. The immigration levels have been massive. But what happens when mining stops booming, which is what's forecast? What happens when that stops booming? The immigration levels out and there's less jobs in the economy. Remembering that mining makes up a fair chunk, over 60% of Western Australia's GDP. So it's going to have a ripple effect in the jobs market, and not just in the mining jobs market, but in the greater jobs market, where one mining job is going to support or does support several other jobs in the area, in the location. The next worst area to buy in Perth right now is Wenaroo. That's in Perth's north outer region, and it's got 70,000 dwellings, which correlates to around 200,000 people. So you can see the price graph on the left. It started to grow very similar to the last one. End of 2020 started to really pick up. Then over the last year and a half, 2 years, it really started to grow, and that's as a result of interstate investors coming in and pumping the market. Exactly the same story as the last one that I showed you. So this price graph, you could have bought a house here for $400,000. Similar house now is double the price. So it's done 100% capital growth on a typical house. Some houses more, obviously some less. Much like a lot of other suburbs in Perth, the stock on market is low. There's low inventory, which means it's not going to take long to sell the stock that's on the market. And the demand is massive. Low days on market, 29 days on market is exceptionally low. This market would typically be 60 plus days on market. Vacancy rate is pretty tight, 1.54%, but again, it's starting to creep up closer to that balanced market, which is around 2%. So that is the supply and demand, and you can see that red number again on the building approvals. There's over 2,000 building approvals currently. Again, some of those will be under construction, some won't have started yet, but it's going to be the trickle feed of stock, that 2,000 approvals, which typical build time on a single house is anywhere from 4 to 12 months. And hopefully it's going to be in the lower end of that because of home builders, mass volume builders wanting to pump out those new homes as quickly as possible. Remember, this is investment stock. We're not building luxury homes that take a year to build. This is generally single level, cheap investment stock. And as more interstate investors move into these areas and get flogged these house and land packages by project marketers, they're only going to add to those building approval numbers. The last area, which is the worst of the worst, is Rockingham. I've had some students buy in this area over the last couple of years, have made phenomenal capital growth and have done exceptionally well. But the time is coming to an end for Rockingham. Unfortunately, you can see the price graph over the last 18 months has been steep as anything. A typical house now is well over $800,000. One that was previously like $450,000. So 100% capital growth over the last couple of years. It's been phenomenal capital growth. And I did this area about 18 months ago. I said Rockingham is going to explode. It was basically going to be the highest performing suburb in Australia that I picked, and it pretty much has been. So I'm normally all for these areas, but now it's in a similar category to the last couple of areas I showed you. We're going to experience some oversupply, and we're going to experience prices flatline and probably decline over the next little bit. So let me show you the supply and demand. And Rockingham's supply and demand is extremely tight on the supply side, basically no stock on market, low inventory, but you can see again, red line, building approvals, there's 1,400 approvals in the pipeline. Obviously more coming as further interstate investors flog the market and get in towards the top of the market. And then the demand is crazy, 25 days on market. But look how high the vacancy rate is in this area, which I'm actually quite surprised by. Whether this needs to be ground truth at the moment, but if that vacancy rate is sitting at 2.6%, that's starting to get into a renter's market, like really get into a renter's market where you're going to start to see rents that have 1 week rent free, 2 weeks rent free. I've even seen markets that they've offered 4 weeks rent free, which is crazy. So getting a whole month free rent just to get somebody in the property to occupy it. So if that vacancy rate keeps climbing and those days on market start moving, I'd be very, very worried about this area having massive price falls over the short to medium term. I know some people are going to tell me that I'm wrong and that they know Perth really well and Perth's market is only just starting to grow and all of that stuff. That is fantastic and I'm really great for you, and if you've got those opinions, that is great. But if I'm right and you still own properties in Perth and the market does decline, then you'll be kicking yourself for still holding them. I think there's much better opportunities right now to be investing in other parts of Australia that have solid economic growth factors. They're major population bases. They're not segmented from the east coast of Australia like Perth. And I like to think of Perth as basically a large mining town. And I have worked in mining towns. My background is an engineer, and I watched the oversupply during a mining boom flood those mining towns, and then it have a ripple effect on the surrounding areas as well. And it happens with mining in these boom and bust cycles, and Perth is very much mining driven in a boom and bust cycle. And again, people are going to tell me that I'm wrong, but the facts are, which I've looked them up, is that mining output equates to over 60% of Western Australia's GDP. So if mining has a hiccup, then the rest of the economy is unfortunately going to suffer. If you are still listening, I'm going to do a little bonus for you guys, and I'm going to tell you about what areas are actually going to boom. And I've told you about how bad Perth is going to be very soon, but where should you be investing right now? This is only my opinion based on the data that I'm seeing and how the markets are growing. At the moment, Brisbane is about 1 year into its growth cycle overall, so I believe it's got another 2 to 3 years to run. Then we look at Sydney. Sydney's just starting their growth cycle, so Sydney probably has 3 to 4 years of growth to do. And then Melbourne is behind the curve, and Melbourne, a couple of suburbs are just starting to grow now, which means that Melbourne is going to probably experience some more pain or be at the bottom of the market for maybe another 12 months. And then we're going to start to see Melbourne come out of the ashes. So that is my crystal ball, and that's where I'm personally investing and investing my time as well. So Brisbane now, followed by Sydney, and followed by Melbourne thereafter. Now, I'm not saying you can't make money from other markets, because there are markets within markets, and I'm not saying that you can't make money from buying in Perth right now, because I still think that there's some other higher end suburbs that have some exceptional buying opportunities in Perth. But I do think that that growth wave or that market boom is going to be short-lived overall in Perth as a whole. So you can definitely make money even in markets that aren't growing by buying unique properties, by buying in suburbs that are undervalued, by manufacturing your own value yourself. So this is just a holistic view over, the whole city, but you've got to have a look at individual data sets for every single suburb. My name is Dependency. Thanks for watching. Like and subscribe to this video. I have done 15 years of property deals, couple $100 million of projects. And if you want me to analyze any other areas that you think are going to boom or bust, or you're looking at a place to invest into, put them in the comments below and we'll see what happens.